Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at the trade setup currently. Most of the American markets managed to end with a positive bias. Europe also did well, but the reason is of the fall as far as Asia is concerned. Most of the Asian markets are trading with heavy losses. The SGX Nifty is indicating a heavy loss, and that is because of the additional $200 billion of tariff that the US has imposed on the Chinese goods. So that's one of the reasons why the SGX Nifty is also trading down by almost 30 points. It was down at 60 points at one point of time, has managed to recover significantly from the lows of the day. How did the ADRs pan out in trade? Wipro continues to do well. It was up almost 4%. IT as a pack did well. Infosys did well. HDFC Bank and Tata Motors also did well in trade. What didn't do well were counters like Dr. Reddy's, Vedanta and ICICI Bank. Now the Nifty did well. It was up almost 94 points in trade currently yesterday, and there was contribution both from the mid cap and the small cap end of the market. The Nifty Bank also did well. It was up 0.5%, but more traction was seen on the Nifty PSU Bank, which was up almost over 1% in trade. Which were the sectors that were buzzing? Energy, real estate and metal were the counters which were buzzing in trade. Probably metal will be in focus again today, because base metals in China have cracked on the back of the trade wars that are going on. As far as this week's performance is concerned, energy, small cap and metal managed to move up in excess of 3 to 3.5%. All the indices ended up with a positive bias. The least performing was the media index, which was still up by almost 0.5% in trade. As far as the month-to-date performance is concerned, auto continues to shine with Maruti coming back to levels of 9,500. Small cap and energy index also gaining. Energy index is being held by Reliance itself. What has not done well is the high beta infrastructure, metal and media, which were down anywhere between 0.3% to 0.5% in trade. Now, if you're looking at the stocks at a 52-week high, Asian Paints, Persistent, RBL Bank, Exide yesterday hit a fresh 52-week high. So lots of stocks on the 52-week high. Couple of stocks on the 52-week low is Finolex Industries and HDIL. As far as the flows are concerned, FIs were net sellers to the tune of 20 crores. DIs bought in almost 3,500 crores in the cash market. Now, the other factors we want to watch is the contribution. What contributed? Reliance, the HDFC Twin and ITC contributed, and that is why there was heavy buying that was seen. Little bit of selling by Kotak, TCS as well as IndusInd Bank. As far as futures is concerned, fresh longs were seen on the futures on open interest build up of 4%. Similar was the case with the Nifty Bank, which saw fresh buying that came in on open interest build up of 10%. Put writers were extremely aggressive yesterday. They were writing in at levels of 10,800 and 10,900, and call writers had to shed positions in open interest. If you're looking at the range where the markets will be playing at this point of time, it will be around the 10,800 is where there will be a lot of support coming in, and resistance is coming in at the 11,000 mark in trade. The only stock in the F&O band currently is IDBI Bank. The PCR moved up both for the Nifty as well as Bank Nifty. For the Nifty is 1.65. For the Bank Nifty is moved up to levels of 1.31 from 1.19. Four stocks I want to highlight. First of all is Exide trading at lifetime high. Yesterday moved up on high open interest build up of 14%. The other factors, the other stocks we want to talk about is IDBI Bank. That saw short covering that came in given the fact that it's in the F&O band. The third stock we want to talk about is Havells India. It's been doing extremely well. It saw fresh buying. Open interest build up was almost 9%. And finally, you have counters like an IndusInd Bank, which posts the numbers of fresh short positions. Open interest was up almost 8%. The counter was down over 1%. But that was what's happened as far as the domestic market is concerned. But let's go across to Bloomberg's Paul Allen for all the top international headlines.
The European Union says the UK's divorce settlement is 80% complete, but warns the Irish border remains the biggest stumbling block. Lead negotiator Michael Barnier says much progress has been made, while floating ideas about how financial services would interact after Brexit. The deal so far includes protection for UK citizens living in the bloc and for EU citizens in Britain, and a 21-month transition period. President Trump has arrived in Europe ahead of a NATO meeting and a one-on-one summit with President Putin. Trump earlier said those talks may be the easiest leg of his trip. He also repeated his demand that NATO members contribute a larger share of the alliance's budget. The president declined to brand his Russian counterpart as a friend or foe, saying he's a competitor, not a rival. Two contenders have emerged in the race to succeed Morgan Stanley chief James Gorman. The lender's named Ted Pick to run its sales and trading division, while another possible candidate, Frank Pettiger, will become head of international operations. Gorman has been shuffling senior executives to groom his eventual successor, although he's indicated he plans to stay on for several years. Former Apple engineer is being accused of stealing trade secrets for China. Xiaolang Zhang was arrested as he prepared to fly to Guangzhou and is said to have downloaded information on Apple's driverless car projects for his new employer, Xiaopeng Motors. The news comes as Washington plans emergency laws that call for more scrutiny of information housed in sensitive U.S. industries. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
The details we have is that this is a list of about 200 items. We're talking about a 10% duty that's being proposed on a total of $200 billion worth of Chinese goods, ranging from electronics to textiles, clothing to leather goods. So it is now focused on consumer products. So we could get an inflationary impact if indeed these tariffs are imposed. There is a deadline of August the 30th. They're going to be consulting up until that point, and then after that you could get these tariffs imposed. That is what we're hearing from the US side. They say that this is in response to China retaliating with its own $34 billion worth of tariffs, which of course China put in place in retaliation for that initial US move around $34 billion worth of Chinese goods. Now this is all for the US side. This is all about IP theft and forced tech transfer. You saw that again in the statement today from the USTR. They said they're willing to talk to the Chinese, but they are focused on trying to change the behavior of China when it comes to technology transfers and what they see as intellectual property theft, and this is punishment for that.
Tom, the thing is that they can't really respond like for like or dollar for dollar here just because simply they don't have that many imports from the US.
That is absolutely right. So China has talked in about mid-June, I think it was, they put out a statement saying we are going to respond with quantitative, tariffs, and qualitative measures. So potentially putting the full weight of China's bureaucracy at play to straitjacket US companies here. Now, we haven't seen an official outlining of measures around that, though we've heard state media responses and editorials talking about some of the potential measures, whether that's tax inspections or holding goods up at port, that could be put into place. But that would be very much likely after this $200 billion worth of additional tariffs that the Trump administration puts into play. More broadly, we're seeing a strategy from China play out now about forming alliances with the European Union to push back on Washington, and also dangling a carrot to countries other than the US around market access and around imports, and China telling companies here to increase their imports from all countries other than the US, whether that's soybeans, seafood, or the autos. The other side of the strategy for China is hoping that US corporates are going to put pressure on Washington, and we've seen that from some of the retailing associations in the US putting out comments already today pushing back against this action from the US. China is hoping that that pressure will play off between now and August the 30th, that they'll get a window of opportunity to get back to talks and negotiations, but they're certainly not looking to back down at this stage.
Goldman Sachs estimates that this could cost upwards to $4 to $5 billion US dollars, and we know that, of course, Tesla has been having or burning through a lot of its cash back home and just ramping up capacity for the Model 3 and all those other problems. So overall, $10 billion, according to Goldman Sachs, could be needed in external funds and also debt refinancing until 2020 to handle all these ambitious plans for Tesla. But right now, we knew that Elon Musk wanted to and kind of had to go into China. For the last year, they've been trying to work this deal. They've signed a memorandum of understanding with China in Shanghai for this new factory that could have cars rolling off it in a couple of years and hitting the capacity target of 500,000 a year within 2 to 3 years after that. So about a 5-year time frame here. And again, Elon Musk is in Beijing today, we understand, probably meeting a lot of different people on how to get this going smoothly. This is not a JV, keep in mind. Past U.S. automakers coming to China had to have a 50-50 joint venture. This is a wholly owned subsidiary that Tesla will be setting up. And really, they had little choice but to do this, because if you look at some of the numbers, Tesla already had been forced to raise prices by as much as 20% in China, one of its lucrative markets, because all the Teslas into China are imported, and this trade war is impacting them. First quarter sales, this was before the tariffs were imposed, sales in China had fallen to 15% of global total sales. In the fourth quarter, it was 30%. So this is something he had to make a move on. Now the big question is, how are they going to pay for it?
On to Indian equity markets. Stock of the day today is Punjab National Bank, where PNB along with Carlyle Group would be looking to sell a minimum of 51% stake in the subsidiary PNB Housing Finance, where PNB and Quality Investment together hold around 32.9% and 37.3% stake in the counter. Now this is as per the March shareholding pattern. Post that, we've seen the Carlyle Group actually offloading a 5% stake in May 2018. At current market price, the 70% stake that the two hold as per the March shareholding pattern goes around 13,958 crore. That's the total consideration at the current market price. A 51% stake sale between the two would fetch them a sum of around 10,100 odd crore, while individually, if you just look at the 32.9% stake that PNB holds in Punjab Housing Finance Company, that is for a consideration of around 6,545 odd crore. Now, Carlyle invested around 1,600 crore in Feb 2015 for a 49% stake in the counter. It has been offloading the stake that it holds in the counter right from 2015 onwards, and this is morely broadly a part of the divestment plan, is a part of the reform agenda that was undertaken by the PSU back in Jan 24th, and also PNB might just look to sell stake in other entities like BSE, and you have ICRA and CRISIL. Apart from that, talking a little bit about PNB Housing Finance, well, it provides housing and construction loans. It's a subsidiary to the company, and PNB holds around 32.9% stake in the company, as mentioned earlier. Apart from that, if you look at the shareholding pattern of PNB Housing Finance right now, promoter entity holds around 32.9% stake, while public holding currently stands at 67.1%.
Let's shift focus to currency and commodity space. Speaking about Indian rupee first, it was tracking losses in the Asian currencies market yesterday, and it snapped its two-day winning streak to end 10 paise lower at 68.82 levels against the dollar. Now, sustained capital outflows along with rising crude oil prices largely weighed on the rupee. Now, traders do remain cautious ahead of the release of consumer price inflation along with industrial production data, which is scheduled to release tomorrow. Well, speaking of the bond market, sovereign bonds declined yesterday as yield on the 10-year benchmark security gained for the second straight session. It ended 1 basis point higher at 7.9%. Well, in terms of flows into debt market, global funds reduced their rupee debt holdings yesterday. That's according to NSDL data. On the global front, most Asian currencies fell against the dollar on the broad-based dollar weakness, and as the regional stocks paired few gains. Well, speaking of the dollar index, it ended slightly stronger yesterday against most of its G10 peers, and it now trades higher for the third straight session near 94.20 levels. Elsewhere, Japanese yen gained against the dollar after rebounding from 7-week lows. Now that is on the back of escalating US-China trade war. And lastly, speaking on the dollar rupee, now it is trading at 68.76 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade. Well, having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up today morning?
Morning, Saloni. Does not look that great a morning as far as the entire commodity space is concerned. Let me start off with the base metal space. Now, overnight, the base metal index on London Metal Exchange, that declined more than 1%. Also, we understand that the US has now moved forward on the proposed $200 billion of China tariff list. So that's the negative for the commodities market. Zinc has, in fact, declined to a one-year low. Overnight, we had aluminium and lead, which declined more than 1% each. Now, if you look at the Shanghai Futures exchange, that is where the real cuts have in fact come in. COMEX copper has in fact declined as much as 3%, and we have the likes of Shanghai copper, which is down about 3%, and Shanghai zinc, that is the one that catches the eye with a cut of more than 1%, and we have aluminium, which is down about 1.6%, with the exception of Shanghai steel, which is holding up in the green. But as far as gold prices are concerned, once again we saw a slight bit of dip. Gold is currently trading lower for the second consecutive day, near the 1250 mark for itself. Moving on to the energy prices, WTI is trading more than 1% lower. Now, this is on the back of a 3-day rally that we have seen. Also, we understand the US market is likely to become the top oil producer by 2019, and the oil prices are sliding despite the fact that we are expecting an inventory decline of as much as nearly 7 million barrels. That is as per API data.
Back to local equity markets, bunch of news that we're tracking this morning. Clearly, it's going to be the day of banking pack. Apart from Axis Bank and PNB, we are also going to be looking at IDBI Bank, where the officials have indicated a deal that may trigger an open offer between LIC and IDBI. Now, LIC is looking to acquire 51% stake in the counter. Also, you have KEC International, which has won multiple orders worth around 1,357 odd crore. Some reaction on back of that development. Also, we are looking in at Coal India, which is on to its divestment plan and is holding roadshows, meeting investors from July 11 to 20th onwards. Also in our list is another metal counter where Vedanta has teamed up with Anglo American to bid for coal mines. We saw the stock reacting negatively in previous session of trade today. This is an ET exclusive that we're talking about. Airtel, Bharti Airtel is planning to raise around $1 billion in overseas loan to refinance its high interest cost that's currently sitting on its balance sheet. Some reaction on back of that development. It's an ET exclusive. Also, Bagaria Industry is, along with that, we have MCX India, which along with NSE is in talks for bigger exchange play. And the last one that we're tracking in on our list today is Bagaria Industries, where the promoter has bought an 2.4% stake in the counter.
The board for private sector bank Axis Bank has decided on a list of 3 potential candidates who could take over as the MD and CEO of Axis Bank after Shikha Sharma resigns from the post in December 2018. Shikha Sharma, remember, in April had announced that she would be stepping down from this position and that she was giving the board 6 months to find a potential successor. The board, in its notification, in its stock exchange notification, said that it will be sending this list of 3 candidates to the Reserve Bank of India in an order of preference, and that after the Reserve Bank of India had selected the candidate that it likes the most, that candidate would be the successful candidate who will take over as the MD and CEO of Axis Bank. Back in April, when Sharma announced her decision to step down from the bank's leadership position, it was quite a bit of a surprise, because only in July 2017 had the bank's board given her a 3-year extension further to continue as the MD and CEO of the bank. But after Sharma's announcement, the bank's board then came back to the stock exchanges and said that they had accepted her resignation and that they would be looking for another successor who could take over from her. The bank had appointed Egon Zehnder as an advisory firm to locate these potential candidates, and that now that this list is going to the Reserve Bank of India, we are likely to see a shift in the leadership of the bank. Remember that Shikha Sharma's position as the MD and CEO was questioned by the Reserve Bank of India, according to a few media reports, wherein the Reserve Bank had pointed out the recent rise in the bank's bad loan portfolio, as well as its drop in profitability, as reasons as to why she should be given an extended term.
Well, it's a strong quarter for Tata Consultancy Services, considering we have seen about a 4% constant currency growth sequentially. And when it comes to the rupee terms, we've seen about a robust 6.8% growth there as well, quarter on quarter. Coming down to margins, standing at around 25%, they're also ahead of consensus expectations, considering, we've seen margins come in against the expectations around 24.4%, and operational efficiencies are an important reason that the management has cited to counter the otherwise seasonal weakness because of salary hikes for this particular quarter. Moving on, we also have a lot of strength coming in for the BFSI segment. It's seen the growth which has been highest in 12 quarters, and this is largely on account of pickup in demand. Do remember that the company has signed a lot of large deals, and the company also mentions that there's more in the pipeline to come through. Finally, when it comes to North American markets, its largest market from which it gets over 50% of its revenues has also seen an uptick of around 3.7% on a constant currency basis. And another very important reason behind the strength that we've seen in TCS's Q1. Finally, when it comes to the digital revenues, these have seen a growth of as much as 44% year-on-year, and they now contribute to as much as 25% of the overall revenue pie. On the whole, a good set of numbers for Tata Consultancy Services.
Let's also get your check on the other stocks to watch based on the delivery buying and selling as of yesterday. The first stock on the list is UPL. Now, that was up about 2% in trade yesterday and saw delivery buying of more than 70 crores. The delivery volume, however, surged 121% as compared to its 5-day average, and the total volume managed to just more than double for itself as compared to its 5-day average. Second stock to watch out for, that would be Havells India. Now, that was up about nearly 4% in trade and saw delivery buying of more than 50 crores. The delivery volume surged 117% as compared to its 5-day average, and the total volume surged to just about 88% as compared to its 5-day average. Last and final stock from the auto space, Eicher Motors, was up about 2.5% in trade and saw delivery buying of over 200 crores. The delivery volume surged about 87% as compared to its 5-day average, and the total volume surged about 70% as compared to its 5-day average.
All right, as always, a lot to look forward to over the course of the day. You'll find all the live market action right here on Bloomberg Quint Live. There are several stories as well on the website bloombergquint.com. Here is just a couple. For the second year in a row, Andhra Pradesh has been ranked as the easiest Indian state to do business in, according to a survey. Surprisingly, Maharashtra ranked outside the top 10 at 13. And very welcome news, the 12 boys and their football coach who were trapped in Thailand's flooded Tham Luang cave complex have been safely rescued, bringing the 3-day evacuation mission to a successful end. All right, that's all you need to know going into trade today. Up next is Indian Open, and that'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.